928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. And from our studios in Las Vegas, Nevada, Mr. David Williams. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Hey, good afternoon. Welcome back. Today is Tuesday, 22nd day of September, 2015. Let's take a quick look at the numbers. The S&P is down, cash market, 29 points, 1.5%. Dow is down 262 points, again, 1.5%. The NASDAQ, do you really want to know? It's down 93 points. That's almost 2%. And the Russell 2000 is down 21.75%. All right. So in the U.S., we've got red, 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 and more red. Let's go to crude oil and find even more red. We're down $1.15 a barrel. It's 2.5%. Gold is off by $7.80. In Asian markets, we actually see some green. The Nikkei is down 362 points. It's a 2% drop. But the Shanghai is up 29 points, and the Hang Seng is up 39 points. Last but not least, we'll take a look at Europe. The DAX is down 377 points. Now that's almost 4%. FTSE down 172 points, which is almost 3%. And the CAC 40 down 156, 3.5%. So, bleak would be kind, right? If I said it looks bleak out there, that would be a kind statement. So, what is going on? Let's take a look then. The NASDAQ is negative for 2015. Actually, that's a dated headline. I think all markets are now negative for 2015. Let's see what this one little article has to say. U.S. stocks traded sharply lower Tuesday, which is an understatement. Pressured by continued anxiety over slowing global growth following the Federal Reserve's decision to keep rates unchanged. Now, we talked about this at length last week. Traders wanted no change in the interest rates. Okay, why? Because, well, that's what they've had for how many years? And it's been, quote unquote, good for the market. Maybe not good for America, but good for the market as prices have continued, stock prices have continued to climb. Out of that gut-wrenching 666 bottom up to the lofty valuations we find ourselves at now. On the back of some of the worst possible news you could imagine. So the question that we posed last week is, if the Fed raises it, do the markets just throw a temper tantrum, maybe for a day, and then we get back to business as normal? Or the other side of the coin is the Fed does nothing and markets temporarily rally, but then it sinks in, oh wow, the Fed couldn't raise rates a quarter of a point. We're in worse trouble than we realized. And that would lead to this. This is just one big leg at this point, and a retracement, and a leg and a retrace, and we were sort of in a crux here yesterday, and I went through it, and I'll go through it again just real quick. With this move down, okay, and then this move back up, we had an answer here or here. The price was going to do one of two things: leg and a retrace, and then another leg. And if it meant another leg down, then that meant taking out these lows right here. Okay, this area right across here. That's why we drew the circle yesterday, right at the end of the show. If you were here, you'll recall. We said, now, the other idea is that price has put in a leg. It has retraced. Now, look at the time across the bottom. 1,400 hours, 1,500 hours. Whatever time it was that we finished the show yesterday, probably in this hour here. Either way, doesn't matter. We said in order to believe, for it to become believable that this is a bottom and that we're now climbing our way out from this big Fed sell-off, would be for a leg and a retracement, and then a leg that takes out this high right here. Okay, and so overnight we found out exactly what the truth of the matter was when price rolled over and took out this area, and now we find ourselves trading low of the day 1920 and a half. Currently we're off the lows of the day. We're trading 1928 and a quarter. Now that's the S&P 500 Emini Futures. These are last week's trading zones. Of course, our partners are emailed the current weekly zones every Monday morning before the market opens at 6:15 a.m. Eastern. And typically on the show here by Wednesday or Thursday, I will go ahead and display those zones for the rest of the community, the rest of the audience. Now, we have, if I flip back to last week, was this the lowest zone we had last week? No, it was not. We had a zone last week. Now this just goes to show the carryover effect. We see the carryover effect not only from week to week, but we see it even when we go from one contract to the other. I showed you, I just kept flipping back and forth those charts as we went from the September to the December contract. The zones held steady across the changing price spectrum. I know. So 21.22. Was that the lowest zone we had last week? Why no. No, it wasn't. And since it was last week, I'll just go ahead and spit it out. It was 1890/91. Do we have a zone lower than that this week? We do. True story. And again, I'll bring those out tomorrow or Thursday. Back to the little article I was quoting. It's a market that's gripped with fear of uncertainty of the growth of the global economy and its own growth strength, and that's due to the Fed sending the wrong signals to the market. That comment from an economist at Rockwell Global. Dow Jones Industrials lost more than 250 points as the major averages declined more than 1.5%. The Nasdaq, as I already have covered with you, joining the other major averages in negative territory for 2015. This is interesting. We got the Pope and China's president in the U.S. in the same week. No conspiracy. I'm not cooking up any kind of a conspiracy. I just think that's a coincidence. We'll see. The blue chip index, which is the Dow, in case you're new to the markets, and a lot of our audience is more than 11% from its 52-week high in correction territory. The S&P and Nasdaq composite remained within 10% of their 52-week highs. So the 52-week high and the high of the year are two different things, right? It takes 52 weeks. We've got a calendar year, and then we go back 52 weeks. Okay. All right. Fed's window for a 2015 rate hike is closing quickly. Let's see what this says. Federal Reserve may have missed its last best chance to raise interest rates this year. The U.S. Central Bank, with the U.S. Central Bank passing last week on what was once supposed to be a lead pipe cinch for a rate hike. Remember? I mean, it was a done deal. Everybody knew it was going to happen. The likelihood is rising that there may not be a move at all in 2015. There are still 2 FOMC meetings left in the year, and both present a problematic scenario for action. October lacks a scheduled post-meeting news conference, which Chair Janet Yellen uses once a quarter to explain the rationale behind the Fed's thinking both on its rate decisions and economic forecasts. Yellen has insisted that should the committee decide to act in October, it could simply schedule an impromptu news conference. Well, there's a surprise. The market hasn't had a surprise in a long time. Doing so would, however, tip the Fed's hand immediately and risk causing a market shock. This market maybe needs a shock. Or is this a dose of reality? which side of the fence are you on? December is considered a likely scenario by many market participants, but that presents challenges as well. Market activity slows to a crawl around the holiday season, meaning that any jolt to the market, particularly the fixed income side, could be magnified. In all, a year that was supposed to represent a return to normal, remember all that talk about the new normal, or at least steps in that direction, is now turning into more of the same for the U.S. Central Bank. The Fed insists that market participants should focus more on the expected slow trajectory of future rate hikes than the timing of the first one. If that was true, however, the Fed should be able to move whenever it wants. Last Thursday's delay shows that the timing really must matter. You don't want the first hike in 10 years to be a surprise to the market. By not hiking in September, you run the risk of not being able to hike until the April 2016 meeting. The Fed has held its crisis level zero interest rate policy in place since late 2008, even though the U.S. economy technically escaped the Great Recession in mid-2009. In deciding last week to skip an anticipated rate hike, the FOMC cited no substantial weakness at home, but rather concerns over an international slowdown. It's not our fault. That move was significant on a number of fronts. It showed that the Fed had increased its mandate now to ensuring stability in overseas markets and tacitly displayed the committee's sensitivity to the urging of global central bankers who want the Fed to just stand pat. In fact, who was it yesterday? They're taking Jim Cramer to task because this article, I should have saved that article. It said that for many Americans, Jim Cramer is the face of the U.S. economy. How scary is that? The guy with all the sound effects and the shirt sleeves and the whole thing, he's the face of the U.S. economy to most Americans. Not Janet Yellen. If you go, who's Janet? Do you know who? Can you imagine the interview on the street? Do you know who Janet Yellen is? Yeah, no. Do you know who Jim Cramer is? Oh, yeah. That guy's great. Remember? He's the one that said Bear Stearns was the safest place on the planet to put your money. 2 weeks before it imploded and 2 weeks after it imploded, he said, I warned you. And they just kept cutting him paychecks, and advertisers just kept sending in their advertising dollars. It was the most amazing thing I've ever seen. One of. Anyway, this article said that he needs to stop. I'll see if I can find the article while Michael's doing the recap. I'll try to find the article that said he needs to stop this. He's squawking for 0% for a really long time. The economy needs it. The stock market needs it. We need it. It's just a good idea. But this is the guy, the same Bear Stearns guy, that 3 days, I think, or 4 days after the fall, he was in that little boat rowing in front of his desk. Do you remember? If you don't remember, go to YouTube. It's all been carefully captured there for any disbeliever. Go check it out. Just Google it up. Jim Cramer, Bear Stearns, fiasco. Throw a couple keywords at YouTube like that. You'll find the video I'm talking about. Alright, so moving on. Today's show, Michael's going to come in now and do a recap of everything that happened in the live trading room today. The good, the bad, whatever we missed. After that, I'll come back with our good word for the day. We'll take a look at some of the Concierge Trade Alerts from overnight. And, I guess we'll talk to David from Page Trader as we do each and every day. And once we talk to David, then we'll talk to our every Tuesday co-host, my good buddy Jonathan Raring, who I met shortly after I was introduced to the world of Emini Futures as I walked away from equities and stepped into this broad new electronic frontier. He was one of the first real deals I met, and he's been a good friend ever since, and so he joins me each Tuesday, except when there's an emergency like there was last Tuesday. So I checked with him, and he'll be here today, 1:30 p.m. Eastern. And as stocks are falling, for those who have chosen to go in perhaps another direction, such as, bonds, well, there's a little bit of a different story. Last night in our Concierge Trade Alerts, on the 30-year bonds, we had suggested being long above 154.24, which is right here. 154.24. Okay, now a couple things worth pointing out. As this thing triggered, it only ran up 4 ticks, which is $125 per contract. And then it drew down. It drew down all the way to 154.13. That's 11 ticks. Now, let's take a look at this. Let's go 11 times 31.25. What do you got? You got $343.75. Okay, that's what that drawdown per contract was worth. $343.75. 343.75. Okay. Guess you're supposed to put a minus in front of that. Oh no, go fancy. You do this. Negative. Okay. And just so nobody's confused, we'll do that. See? Okay. Now, from 154.24 to 155.24. Well, how much is that? Well, let's see. Is that 155.24? It is. Oh, it's right at the tippy top. Swing high 155.24. So from 154.24 to 155.24, that's a $1,000 per contract move. So, was there a $343 drawdown? Yes. Did it ultimately rally up to $1,000 per contract per day? Yes. Did this first little run-up give you enough to just get your $100 per contract per day and get out? Well, it went from 24 to 28. That's a 4-tick move. At 31.25 per tick, there's 32 ticks and a point. So from 154.24 to 155.24, that would be 1 point or 32 ticks. So a $343 drawdown, and if you nailed it right on the head, I mean, ding ding, and who can do that? You look left, you can see that there's the potential for us to run into some resistance, because support and resistance is not broken. Despite all the newfangled technology and gadgets and ideas and concepts we have today, some of the old stuff still hanging in there, like a hammer and a nail and a screwdriver and a saw. Those things still actually work. So now if we go back a day, the alert said to be short bonds 155.08, and at this point here we didn't have much of a drawdown yesterday, but that was $1,000 per contract rally. from 155.08 to 154.08. Now at 153.08, we didn't quite get there. That would have been 2,000, but we didn't go there. And if we back up a previous day, long above 154.03, not much of a drawdown there, but we actually hit 155.03, so that's a $1,000 per contract move. And then 154.03, 155.03. No, we didn't do 156.03, but by golly, we did that one. And so bonds have created a lot of opportunity. The previous day, from 152.14 to 153.14, that would be another 1K kind of day. And not every day is $1,000 per contract day in bonds by any stretch of the imagination, but since we've had all this volatility of late, we've sure had some opportunities. But that's just one of the markets, and I'll talk to you about all of the Concierge Trade Alerts when I come back. Michael, if you're ready, you can take it away, and
okay.
We'll see what you got to say.
All right, let me get this over here, and I'll take it away. Uh-oh, I didn't change my name. There's too many of you in here.
I forwarded you 2 emails. Did you get those?
I did. I did. I made sure they were included in the 115.
Okay, so...
and I'll take care of the 3 o'clock.
Alright, I was just going to say, ask him if he, on top of the meeting, still wanted to chat. If not, I'll assume that you'll take it. Okay, alright, good.
I got a phone number for it, too. All that stuff.
Alright, well, just, I guess if you're going to be talking to him anyway,
yeah,
that'll be fine. Okay.
Yeah, I'll take care of it.
Alright, well... I'm waiting on your charts.
Alright, you should see... oh,
maybe,
did I not change?
Hang on, maybe I need to click my...
No, I didn't do it because I had to change my name. Okay.
Okay.
There.
Now I got it.
Alright.
Okay, I'll hit mute on this end.
Okay, excellent. Alright, we'll just start right here. Good afternoon, everyone. Yeah. Good afternoon, everyone. Today is Tuesday, the 22nd day of September 2015. If you have not taken a free trial with us, just go to CFRN.net and in the right-hand column where it says register for a free trial, put in your name, put in your email, click register for a free trial. When you do that, you'll be sent a confirmation link. You must click on that confirmation link, okay? If you don't click the confirmation link, you're not going to get your free trial because we don't know that you did that, all right? To get to our spreadsheet, you just need to go here to view live trading room results, okay? Click that. Then right here to view our daily results spreadsheet from today back to January 2nd, just click right there. And yeah, and there you have it. There's our spreadsheet. Okay, let's go down all the way to the bottom is where today's results are. The most recent results are right here. Okay, 22nd of September. Today in the Russell we made 11 ticks. In crude oil we made 12 ticks, and in gold we lost 4 ticks. Today it took us 1 minute and 1 trade to get to our goal for the day. And our goal for the day is $100 a contract. We traded 26 times today in the live trading room. All right, on the month, we are now up $3,402.50 a contract. That's over 15 trading days, averaging $226 a contract. $226 a contract. Okay. Let's see. Over here, we have, if you have an $8 commission, you would have a net profit of $1,154 a contract. If you had a $5 commission, you would have a net profit of $1,997 a contract. Okay, $1,154, $1,997. That is that. All right. If you scroll down to here, you can see on the year we are now $45,137 a contract. That's over 176 trading days, averaging $256 a day. Okay, averaging $256 a day, over 176 trading days, 45,137.50. Okay. All right. Let's see. Yeah, that's it. All right. Going to slide this over here like that. And now I'll just go through the trades. On the ES, let's just start out with ES. I always start over there with the leftmost chart and let it build up a little data right there. Come on, come on. Really? Okay, let's just get rid of this. Okay. It's just being difficult now. There was only one spot that we had identified, if I remember right. It was right in here. You know, we had plenty of activity in the other markets today. I mean, I traded 15 times on the Russell, I think. So right in here was the long trade on the ES. It would have been a break-even trade for me. We had drawn in some trend lines, but you can see the thing had gone down to the weekly trading zone down here. We had excuse me. There was a shorting opportunity here, 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 and there, and there, and there. Actually, this one in here wasn't one. Sorry, over here there was, and then went right down into the zone. Out of the weekly trading zone, there was a long opportunity right here. And then it just kind of went back and forth in and out of the zone from there. All right, during the break, there wasn't really anything that you could do in there. Okay, so we had identified just the one trade that would have been a break-even trade during the live trading room. Okay, on the gold today, gold. Let's see, we had 5 trades here on the gold today. Our first trade was a break-even trade. Second trade was 1 tick profit. Third trade was 3 ticks profit, putting us at +4. Then a break-even trade, a missed trade, and then we stopped out pretty much to the tick here. So we ended with -4 ticks on the gold. During the break, no action at all. Okay, no action at all during the break. All right. On the Russell, let's see. On the Russell, we'll scroll back. See, I told you I had a lot of trades on the Russell today. Alright, still scrolling, waiting for it to populate. Our first trade of the day was on the Russell, and that was a long trade right here. We got long right in here. We took 10 ticks profit, and we had made our goal before the first minute was up. Here, let me put this up so I can see the questions. Do that and that. That was our first trade. Our second trade, we made 5 ticks profit, putting us at +15. Third trade, another 10 ticks profit, putting us at +25. Fourth trade, 3 ticks profit, putting us at +28. Then a break even. Then a missed trade. Then a couple more break evens in here. Somewhere in here I stopped out. There it is right there. I stopped out, got us down to 20. Then a break even. Then I stopped out again, got us down to 12. Okay. You know what? There. Okay, good. At this point, we were at +12 ticks. I gained 4 here, got us back to +16. 2 here. I missed a trade there, and I gained 2 ticks here, got us back to 18. A break even right there. 8 ticks right there, got us up to 27. And then I stopped out there, back to 19. And I stopped out there, back to 11. And I believe that is where we ended trading for the day on the Russell. So our high of the day was 28. Our low of the day was actually 10 on the Russell. And we ended with 11. Okay. So we went from 10 up to 28, down to 12, back to 27, down to 11. So it was back and forth a lot on the Russell today. During the break, there were a few opportunities here during the break. Short right in there, a long trade right in there, and there, and a short trade in here. And that was about it during the break. Okay. Let's see, that was the Russell. Now on crude oil, let's see what we have here on crude. Hang on, I'm reading this. Let me know, and I will go. We have one. I better try Thursday or Friday. See then. Okay. So Mike Reed's not coming in today. That's what those blinking things are, Dwayne, just so you know. All right. So on the crude oil today, let me scroll back. Again, on the crude, we're going to end up, actually, no, we don't have an issue with the crude because we don't have weekly trading zones. We missed the first trade right here on the crude. I can't believe that would have been the first trade. Yeah, I guess it was. We missed the first trade here on the crude, but we grabbed the second one. We took 6.6 profit on that one. Missed the third trade, which would have been really nice. Missed this one right here, which also would have been really nice. We got this one for 5 ticks, putting us at plus 11, and this one for 1, putting us at plus 12. Missed that, took a break even there, and that was all the trading we did on crude. There was a long trade right here during the break, nice long trade in there. Momentum long trade here, would have gotten you a couple of ticks at best. And I'm scrolling. And that was about it. That was about it on the crude. Alright, so we ended with plus 12 ticks on crude. The soybeans, we had a couple of trades, both of them break even. There and there. Both break even trades on the soybeans. During the break, there were no opportunities really at all. You could have gone long there, I guess, off the BBC. It would have stopped you out if you'd have done that. Okay. On the euro, a name change. Name change. I don't get it. On the euro, we didn't trade at all. We missed a short trade here. There was a momentum short trade, and another one over here. That would have been a break even. And that was it on the euro for us. Okay, I mean, we did have quite a few trades today, but most of them were on the Russell. Over half of them were on the Russell. And that was it for us on the day. Alright, so here, let's bring this over. Alright, so on the day, we're a plus 11 on the Russell, plus 12 on crude, minus 4 on gold. All right. We got our goal in 1 minute and 1 trade. It was actually less than a minute and 1 trade. We had $100 a contract. We took a total of 26 trades. Oh, I had to change my name. The way GoToWebinar works, my name defaults to Dwayne's by default. It defaults to Dwayne's. Alright, so on the month we are now up $3,402.50. That's over 15 trading days, averaging $226 a day. Okay. The net profit with an $8 round turn would be $1,154. Net profit with a $5 round turn would be $1,997. Okay. On the year, we are now at $45,137.50. That's over 176 trading days, averaging $256 a day. I won't pop. Thanks. Thanks for that advice. All right, so that's where we stand on the day, on the month, and on the year. And let's scroll back once or twice. Here we go. To register for a free trial, you just go to the homepage at CFRN.net, and the right-hand side, put in your name, put in your email, click on register for a free trial. When you do that, you'll be sent a confirmation link. You must click the confirmation link. If you don't click the confirmation link, you will not get the free trial. Okay, it's as simple as that. You must click the confirmation link to get the free trial. All right, and that is that. Okay, so with that, guys, we can head back out to fabulous Phoenix, Arizona. Now, I want to remind everybody who's in here who was on the trial, there is a meeting at 1:15, trial members meeting. Hang on, let me go find the link to it. I know I have it. Here it is. This is the link to the trial members meeting. Okay, if you're in here and you're on the trial, then that is the link right there. Okay. That is at 1:15 p.m. It's in a half an hour. All right. So if you want to go there, if you're not on the trial and you still want to go, wait about 5 or 10 minutes. And wait until like 1:20. All right. And if there's still open seats, and there probably will be, there aren't that many people on the trial right now, then you're welcome to come in and watch the meeting. Okay. All right. There you have it. So now we can go back out to fabulous Phoenix, Arizona. Phoenix, are you there?
Ah, yes, indeed. Indeed, I am.
Okay. Awesome.
Alrighty, so here we are back at S&P 500, Emini Futures. Oh, what was the recap of the recap? One trade? Is that what I heard you say?
One trade, 1 minute, $100 a contract.
It doesn't happen every day, guys.
It does not.
But we record how long it takes and how many trades it takes every day. Why? Well, so that the whole 2 points a day thing can be more than just an urban trading legend. In fact, that's kind of what we did. We took an urban trading legend and turned it into a historical fact going on, what, 3 years now?
Yes.
Is that almost right?
That is almost right.
Yeah. Now, not every single day did we hit it, but we know exactly what days we did hit it and what days we didn't hit it. And that's just based upon the 2 hours that the live trading room is open. That doesn't include trades before or after. You know, there are 24 hours in a day, but when you go to our website and you download the spreadsheet that covers every trade taken during that period of time, you'll know exactly, you know, what day we made it, what day we didn't make it, how we ended up. Everything is there. We record everything that happens in the live trading room. Every word spoken, every trade taken, it's all archived. Becomes a permanent part of history. It becomes a historical fact, never a he said, she said kind of thing, but just, you know, the truth. And I think we all know that the markets could use a little more of that most days. Don't you think? Alright.
Yeah, indeed.
That's what I'm thinking. Okay, well, crude oil was another nice one last night. The first trigger and drop, well, just in the first hour, it took us from 46.20 down to 45.87. So about 30 ticks, 33. We only need 10 if you're trading the 2420 blueprint. That's all you need is just 10 ticks and you're done for the day. And you don't have to go trade any other markets. You don't have to take any other setups. That's done means done. So that's 3 times your daily goal right there in that one red candle. Ultimately, the swing did drop 83 ticks, okay, at $10 per tick. And as we know, important prices, important areas are almost always tested. So it did go back to check in with 46.20. Got its time card stamped right in the 10 a.m. hour this morning. and now it's dropped. It dropped, in fact, in the same hour that it went back up and got its clock punched or its card punched. It dropped back down to, well, let's just see where we are now, because this was all part of a climb. We'd have to get into a smaller time frame to see, you know, who was on first. But right now we're back at 45.58. Now remember, from 46.20, if we got all the way down to 45.20, not saying we will, just saying if we did, that would be a $1,000 per contract move. Okay? 1 point in bonds, or $1 in crude oil. Okay? But first we need to go to our good word for the day, and then we shall cover the rest of these Concierge Trade Alerts. And now we're still down here on the S&P, bebopping off of this 2122 weekly zone from last week. And again, that was not the lowest zone last week. There was actually a zone lower at 1890/91. Am I predicting we're going to go there? No, I don't predict. So you don't ever have to worry about it. Is he? Because that's just, we wait for it to see. We don't know. We admit we don't know what's going to happen next. We don't have that gift. However, based on what happens, we always know what we're going to do next. So that's how we operate. That's the way we approach the market. We don't know what the market's going to do, but we know what we're going to do. All right. So take that with you, and let's talk about prayer for a minute, because that is what we've been talking about now for 3 days. Today will make day number 4. We've been talking about different ways to pray: sit, kneel, stand, run, jump, hang upside down, however you get connected. Headphones, praise and worship music, it's entirely up to you. Psalm 91:15 says, "He will call upon me and I will answer him." Psalm 91:15, "He will call on me and I will answer him. I will be with him in trouble. I will deliver him and honor him." Wow, now that's quite a promise. Now, if you called one of your friends, there's a good chance if he looked at the caller ID and he wasn't too terribly busy, he'd probably answer the phone. He will call on me and I'll answer him. All right. I'll be with him in trouble. Now, if instead of a call it was a text message that said, "Dude, I'm in trouble. Flat tire on the freeway, need bail," maybe you might not be so quick to respond. But God says, no matter what the message you're sending out, He says, if you call on me, I'll answer you. I'll be with you in trouble. I'll deliver you and honor you. Wow. When we try to spend an extended period of time in prayer, our minds tend to wander. For most of us, that's usually about 3 minutes. For some of us, it might be 2. Okay. Some of us, we're doing good if we can hang in there for a minute and stay focused. Well, the mind, like a muscle, can be trained to do incredible things. But like the muscle that you take to the gym to work out, you got to take your brain out and work it occasionally. Okay? Now, when the mind wanders, when that happens, is God upset with us? Does He get angry? Is He ticked off? No. When your mind wanders, God's Spirit is still with you. Sometimes your wandering thoughts can actually guide you into prayer. John Ortberg writes, "I begin praying and then I imagine myself being wildly successful at something. Or I replay a conversation with a person I'm upset with. Or I try to figure out how to solve a problem that I'm worried about. I used to think of those kinds of thoughts as an obstacle to prayer. But I've come to think of them as prayers waiting to be prayed. Maybe the reason they pop into my mind isn't simply to snap my short attention span, but rather what my mind is really concerned about, and it's the power of the Holy Spirit directing my thoughts. So maybe, just maybe, come way out on this limb with me. Instead of trying to suppress these thoughts, maybe I better begin to talk to God about these thoughts, whatever they might be. And just like that, you can find yourself right back in the flow of prayer. Indeed, we are free to pray in ways that will best help us in the joyful awareness of God's presence. Obviously, things like getting your hair done or your car fixed are distractions, okay? Period. We have to be realistic about this whole thing. Now, when these arise, write them down or say, I'll get to that later. Then get back to prayer. Developing a rich and rewarding prayer life isn't something you're going to accomplish overnight. Kind of like learning how to trade, okay? Not going to happen overnight. People that promise you it can or will, well, they're just pulling your leg. And they have some other kind of motive or agenda. Something other than your success. And so be careful and be wary, and don't fill yourself with unrealistic expectations. If we've had God on ignore for the past 10 years, when the second we open the door, of course He's there, right? But if you think you're going to drop into this meditative prayer like some monk that's been sitting up in a cave for 20, 30 years, number one, I don't know that that's going to happen. And number two, I don't know that you want that to happen. Because I don't know that that's really reality. We were put here on purpose, put here on earth for a purpose. And I'm not knocking the guy that's able to sit in the cave for 20, 30 years, okay? But I'm thinking that perhaps we were put here to do something. Because when Jesus was here, for the short few years that He was here, He was always busy doing something. Going here, going there, preaching, touching, healing, praying, right? Dying for our sins. He was a busy guy. He was always up to something. Again, not knocking the contemplative life. Just saying. Something to pray about. Ask God, what would you have me do? Remember, we've talked about that on a number of occasions. Just asking God straight up, what do you want me to do? And then meaning with all of your heart that whatever He says, you're actually going to be willing to do it, to take it up. It's not going to happen overnight, this rich, rewarding prayer life that we've been talking about. You have to work at it, but the rewards are more than worth the effort. You're not unique, and we all think we are. And in some ways we are each unique, of course. But there's some meetings you can go to where you'll find out that everybody there tells your story. You may have been to one of those meetings. I don't know. But when it comes to this prayer thing, battling with distractions, you most certainly are not unique in that respect. Those who succeed in prayer are those who learn to deal with the distractions. Not run from them, not get angered by them, not get frustrated by them, not give up because of them, but learn to deal with them. And that's our good word for the day. All right. And I do believe we have one more installment. That was it. You're done. That's giving you my 4 best messages on how to pray. Okay? If you have questions, you can always email me, support@cfrn.net, and I'll just point you to the Bible, and because all the answers you need are right there. It's already been written. You could shortcut the email and go straight to the book. It's all there. All right. Concierge Trade Alerts. We already covered the S&P. Yes? No, maybe we didn't. All right, then let's do that real quick, because we're just about out of time, and we got to go out to Vegas. The S&P 500 right here. Okay. Is that it? No, that's not it. That's it. S&P 500. Last night, we sent an alert out to many traders. A whole lot. Partners, clients, you name it. And we simply said, if you trade the S&P 500 Emini Futures, you might want to consider being short 1955. Okay? I mean, that's what the thing said. Just like with the bonds I showed you and the crude that I showed you. So, had a person gone out on a limb, we've already been out there once today, come on back out, gone short at 1955, in that hour, okay, which happens to be the London Open, right? How many times you heard that? We dropped to 1943. So that's a 12-point drop in 1 hour, okay? How many points do you need if you're trading the 2420 blueprint? You need 2. 2 points. In this hour, we dropped 12. This complete drop has been roughly 34 points down to this area where we would expect there to be support based on this last week's zone and also this week's zone, which is not too far. That's 136 ticks at 12.50 per tick. If you're looking for 2 points a day on a 5-day week, that's 10 points. This is 34. From entry to potential support. That was a nice little ride. Did we pass through an area where there was support last week based on a zone? Yeah. 46.47. Right there. Last week was weekly trading zone 46.47. You see that? So had you been trading just from there to there, or to this week's, you'd have been good. Oh, actually, I just gave you this week's. Okay. Well, that's your freebie for the day. How about that? I got too many notes here on my desk. All right, what else we got? We already looked at bonds. Bonds already climbed $1,000 per contract for the day. First, there was a opportunity for 3 ticks. Actually, you can count that as your daily goal because that's $90 and change, right? $343 drawdown per contract, which led to a $1,000 plus per contract move. Oh, it's already 3 after. We got to go to Vegas right now. After we talk to David and as we talk to Jonathan, or after we talk to Jonathan, we will, in fact, finish with the Concierge Trade Alerts. You've already seen Crude, but we'll take a look at the Russell and the Dow, the Euro, and all of the others. So don't go away. We'll be right back.
You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you a no-obligation information kit absolutely free. 866-928-3310.
We don't on your way. I thank the Lord for love like ours that grows ever stronger. And I always will be true. I know you feel that same way too. Oh, I love you more today.
Good morning, Dwayne.
David, good morning. Welcome to the show.
Well, thank you very much. Pleasure to be here. Hope everyone's having a decent day today. We've got superb volatility, that's for sure, or very big volatility in the markets today.
Yeah.
In a number of markets, not just the S&P.
S&P, bonds, crude.
Yeah.
Those are the only ones we've got around to looking at on the show so far today, but I can certainly vouch for those three that they definitely got some volatility going on.
We certainly do. Certainly do. Interesting positions for the markets. We can get into them anytime you want to, but I want
got
something
an
on
email from a guy yesterday who says he advises the Pope.
Okay.
Let me see if I can find his email. And he offered to come on and do an interview. And so I should send him an email this afternoon. Yes. The gentleman's name is Greg Williams. He's with the Jubilee USA Network. And, okay, no. The interview would not be with him. The interview would actually be with the executive director. Yes, it would be the executive director of Jubilee USA Network. Our executive director, Eric Lee Comte, C-O-M-P-T-E, L-E-C-O-M-P-T-E, advises the Vatican on the debt, tax, and financial policies at the center of the crisis in Greece and Puerto Rico. He's an expert on United Nations working groups on debt and finance. He works closely with the leadership of the Catholic Church on these issues. The week after the Pope's visit, he and Puerto Rico's Catholic Archbishop will hold high-level meetings with the White House and Congress about the island's economic crisis. And so he has offered to speak with us about the Pope's visit to the U.S. So I should send out... I'll email him back and let him know what kind of a time schedule we have, and it may be that we have to do something off the clock and create a standalone podcast, perhaps.
I wonder what prompted him to pick CFRN.
I get contacted by press people all the time.
Okay.
But usually remember we had a string of we brought on the girl from New York, the one that's, when people...
catcall girl.
And then we had a couple different authors. No, I get these invitations all the time, but most of them don't typically dovetail in with what our show's really about, which is finance and nonsense. They're usually really serious about something, and so this one I thought, though, with the Pope coming and this being such a historic thing, and the fact that this does have to do with the economy, I thought it might be a good fit. So,
yeah, the Pope is apparently not crazy about capitalism. From some of the comments that he has made.
Right. Before he became Pope, he used to take the bus to work.
Really?
Now, here's a guy who they would, of course, given him a chauffeur-driven car because he was a high-level person inside of the Catholic Church. I don't know what his exact title was, but he was a guy that could have got a ride to work. But he chose, I think I've heard him referred to as the working man's Pope in that. But yes, his economic policies and thoughts on life do tend to be a little left-leaning, and I think he has shocked a lot of the members of the Catholic faith with some of the things that he has come out in support of. So.
Well, that's very interesting. I happen to be, I believe myself, very much that capitalism is the reason that poor people can have a good life, is because of capitalism. If we go to socialism, which is where the government provides everything equally to all people and so on, except for a group of elite people who live in staggering wealth, that being the government itself, where and when are you going to have a Steve Jobs? Where and when? Look at socialist countries. They don't come up with the iPhone. They don't come up with computers. They don't come up with any number of things that society now relies on and sees as vast improvements in living and so on. They just don't do it because there's no real incentive. And so while giving people a financial incentive can, like any method or system, can have its problems, I think the growth of America becoming the greatest country on the earth through capitalism and through our Constitution and our method of government and so on speaks volumes. And look at the results that of what America has brought to the world's table in terms of engineering feats of excellence, putting men on the moon, every possible thing you can think of where we're constantly working to improve. Now, there's all kinds of arguments for socialism and against socialism, but one of the best ones is that America got to its greatness through a very brilliant mix of capitalism, our Constitution, our form of government, our political system, and so on. People sometimes struggle and cannot get ahead, and there are poor people in every kind of system. Socialism is trying to solve that portion of the problem at the expense of everything else, because if you look at socialistic countries, they're not great producers of anything. They build statues to a notary. Person was a notary, they have a statue. That's greatness in a socialistic country. We don't want to go there, I don't think, and in spite of the Pope may believe that is what is best, I really don't think that is best. And I think there's many, many opportunities that are missed in life for people's own self-expression, their own hidden talents and so on are not really going to get expressed in a socialistic environment. They're going to get expressed in an environment where they can achieve greatness through their own talents and so on, or some level of greatness through their own talents and so on. So I'd rather be a poor person in the United States of America than a poor person in a socialistic country, that's for sure. And I think most people that understand the difference would be. But he's coming from a very different point of view, too. He's coming from a probably purely humanitarian viewpoint where he doesn't want to see any person suffer, but he's also repressing by that plan, not he, but a plan like that, represses people to nauseating levels of sameness and bureaucracy and so on in people's lives. So yeah, he believes that, and he's coming from a very unique perspective. But our world is a better place because of the United States of America. You wouldn't know that from talking to our current administration, but the fact is that the United States of America is the greatest country on the earth, or at least was, if it's not right now. I hope it still is. And we achieve that greatness through capitalism, through allowing people to rise to their own occasion and to be rewarded for rising to their own occasion. And are there problems along the way? Yes, of course. There's all kinds of problems in any system like this. But I think more people are happier when the United States is doing well and when our economy is well and so on. More people are happier on a head count per thousand or whatever than you would find in just about any other country under the sets of conditions that America operates under. So, we have an administration that currently does not believe in the exceptionalism of America as it is. They believe that there's a kind of social justice that has to be done and has to be paid for our greatness. That is one of the most perverse lines of thinking that I've ever heard in my life from politicians. And although he and the president and this administration may not come directly out and say that, it's been very well absorbed by the populace now, that there's a price to pay rising to your own excellence. There's a price to pay for being great. And this administration wants that price to be, we knock the United States back down so that it isn't so great, so that exceptionalism is reduced, because that hurts other people in some way. Quite the contrary, that exceptionalism makes the average person aspire to be exceptional, to want to be a part of America. I don't see millions of people leaving America to move to Mexico. I don't see millions of people leaving America to move to Greece or Portugal or Cuba. I see people by the millions moving from Greece, from Portugal, from Cuba, from Mexico to come to America. So the administration is painting a completely false narrative that this greatness hurts people. It actually attracts people. It makes people want to aspire to their own greatness. People want to find their own guiding light and be rewarded for it. And that's the beauty of America. So we have to get rid of this administration that is on some kind of strange, almost a backwoods kind of thought process about what greatness is, what exceptionalism is, what individual individual peak performance for people are, and all these other ideas. They're just wrong-headed about it, and we've suffered through just about enough years of that and seen the results of that. We got a very divided up country now on political basis and many, many other ways. And to be blunt, the Pope, coming from a humanitarian viewpoint, I think is even incorrect. I don't even think from a humanitarian viewpoint that socialism is the best thing for people. We have all kinds of programs to help people. We have all kinds of entitlement programs. America, strangely enough, can afford a lot of entitlement programs to help people get ahead. But people feel great satisfaction in personal accomplishment, and America rewards you for personal accomplishment. That's the beauty of America, is you are rewarded for personal accomplishment. You're not punished for it. Exceptionalism isn't frowned upon here, except by this administration. So my opinion is that there's no good socialism. There's no socialism that makes people happy. What it does is make a very small elite group of people very wealthy, and they keep all those people who now everyone has the same. And somebody started with this, everything needs to be the same somewhere along the line. It's not true in nature, it's not true in finance, it's not true in art, it's not true in any other area of life. But man seems to want, people get very hurt when they see somebody have something they don't have. And the ones that are most hurt usually are the ones that are least willing or least likely to make efforts to get those rewards. Those are the ones that are most hurt, not the people who are actually trying to get those rewards and receiving rewards through capitalism and so on. So there's my take on it. I think the whole concept of capitalism, socialism, is bad for people. It hurts people, and I think it hurts people en masse, not just a few people. If you want to live in that kind of environment, you're more than welcome to. And listen, even in the United States, there's communes. I have several friends that live in communes, which are quite socialistic. They're computer programmers. They've agreed to live in this situation, and they've chosen that, and that's fine. And if they're happy working in that situation and working that way, then fair enough. That's great. That's the beauty of America, that it even contains within it groups that would work that way. But most of us really like the idea of being rewarded for personal accomplishment, reaching for goals, reaching for our own exceptionalism, whatever it is, and having the opportunity anyway, not the guarantee, but the opportunity to be rewarded for that. So anyway, it'd be interesting to have your guy on and hear him talk about either the philosophy that the Pope is looking for, or perhaps the Pope's finances, which, strangely enough, the people that always want, no disrespect, but I've noticed that the groups that want socialism are always the groups that are accumulating the most amount of money. The church is not exactly poor man's land, and they have all the money that they could ever possibly ever use huddled up in their own bank accounts and so on. Fair enough. I'm a believer in that. I believe in that. I'm not punishing them for that. But I've just noticed that many times the governments and the people that want socialism end up essentially being dictators over those people, and they're really a limiting factor on humanity's growth, a limiting factor on artistic, engineering, intuitive expression. They're a limiting factor on all of that. All so that you can ring the bell and say everything's equal. No one has anything different than everyone else does. You've got your little pod you live in. They've got their little pod you live in. You can get up and you can know that no one has something you don't have, as if that's the worst possible thing that could happen to a human being. America got great knowing that other people had things they didn't have. America got to be the highest level country on the planet with millions and millions of people knowing that others had things that they didn't have. Somehow it worked really well for America. I believe in that. That's what I believe in. I believe in personal expression, personal self-growth, personal excellence, and so on. And if you can be rewarded for it, you can be rewarded for it here in America and have a very good life from that, wherever your starting point is. Don't let them fool you. So there you are. That's my show. Good night.
I think that's when you're supposed to drop the mic.
Yeah. Walk off the stage.
Yeah. In 1903, James offers from Florida. 1903, Great Britain was the largest economic power in the world. The United States and Argentina were nearly tied for second. Argentina subsequently went socialist. The U.S. continued on its capitalist path. The consequences speak for themselves. That's a very interesting little bit of history there, James. I wish I had one of those photographic memories, because I would snap a shot of that and never forget it. That's good. 1903, the U.S. and Argentina were tied for second place behind Great Britain. Amazing.
It's in a way it's kind of like Obamacare. Just to say again, the people that issue the socialistic cause are not people who are living by it. The people who issued Obamacare don't live under Obamacare. They have their own special health care system, don't they? But they've issued it for everyone else so that we all have to deal with that, and it's the law and so on. Fair enough. But they don't have to live under that. See, it's even evident in our current administration that what's good for everybody isn't good for everyone. It's just good for people who are under the rulership of others. That's who it's good for. And that's what happens in socialism. You essentially get a small group of people at the top that live like, basically, like Americans aspire to live, while everyone else is, doing the pod thing through socialism. So we even have a good example of it in this administration's healthcare plan. They don't live under that healthcare plan, but we do. See? There it is. Right in front of us.
I love the diversity of our audience. In order, where is everyone? Oh, wait a minute. Let me get it all here. Let's see. Where did it go? Doggone it. Okay. Where is everyone? Open your eyes, mind. This crap that our leaders, not our people, feed us daily is nonsense. They have an agenda. Do you really think God would approve of all the BS death we deliver unto the world? Followed up by, David, do you have any important levels or dates showing up in November soybeans?
Right.
That
Listen,
was a triple ringer.
Yeah.
That was good. Two different people, but that's just the flow of thought, the consciousness stream of the audience. Awesome.
Yeah.
You won't find all that under any other roof. And there was
Yeah.
another one. Let's see, that one was pretty good too. This is what it's all about in the U.S. Well, I've been looking real hard, and I'm trying to find a job, but it just keeps getting tougher every day. But I got to do my part, because I know in my heart I gotta please my sweet baby. Yeah.
Yeah.
Well, I ain't
That's a nice song.
superstitious, and
Steve.
I don't get suspicious, but my woman is a friend of mine, and I know that it's true that all the things that I do will come back to me in my sweet time.
There you are.
Keith, I gotta give you a bell too. Gotta tune that thing. Yeah. So all that in a bag of chips. Ain't that something?
Yeah. If America isn't run properly, it will cause people to not. It makes it harder for people to have a job. If there's not economic incentive and so on, if things are done differently, and this administration has done things differently, and that makes people yearn for more government incentives, more government entitlements and so on, and therefore more people get into the entitlement mentality. So if the United States isn't run properly, you get a larger group of people who want entitlements because, in some ways, rightly so, because they're just not able to get the work, they're not able to get something going on because the country has not been run properly. And an argument could be made that one of the reasons for running America poorly, if that were a motive, would be exactly that, to get people off of self-responsibility and wanting to rise to their own occasion and so on, and they just want to get a check. They just need help. And so that sells that idea better when you really can't get a job very well, when the economic recovery is really slow. Not saying that they know how to absolutely make that happen, but that has happened, and it is happening in under a group of people that really do believe if they had their own way, we would practically be a socialistic country. We would have 2 times the government we already have. It's already 30% bigger than it was when this administration started, and you'd have more and more people very happy to get incentives. And like Margaret Thatcher, whoever what it says, the problem with socialism is that you eventually run out of other people's money.
Yep.
Because that's all they're doing,
That's a
is they're
great
simply redistributing someone else's productivity to people who are no longer productive. And it gets really hard to lift a country out of a over-entitlement to get people back to work. That's a very difficult thing to do. So whoever we get into office, we better be pretty sure they know how to run a country or have some really good skills to do so. Because if we go too far down one path, people who need to eat and can't get a job, they'll say, well, listen, I just couldn't pull it off. I'm going with the other side because I need, to feed my family. And before you know it, you've got millions of people doing that, and you have a country that's actually moving by its own forces now in the other direction. So that's why we can't get rid of this administration too soon and get somebody in there who is competent and understands the beauties, literally the beauties of, if our Constitution, by the way, meant for this to be a socialistic country, it'd be pretty obvious, and it wasn't really obvious that that's what they wanted. We live under a Constitution that was a capitalistic document unto itself. It didn't have everything being equal for everyone and so on. So we best get somebody in the office, Democrat or Republican, that can help steer the economy back on the track, because it becomes a self-fulfilling prophecy after a while that more and more people will need government help until finally it becomes very difficult to come back from. That's my take on it. All right, so you want to get into the S&P and some of the other markets?
Yeah,
here?
let's take a quick look at these and see what you got.
All right.
Here's the S&P.
Dwayne got me going. I'm blaming him because he brought up the Pope and the whole thing. So anyway, well, let's see. So the S&P, I want to be very upfront. We felt yesterday that the S&P would test 1942, and if it tested that and closed above that, that was going to be a very good indication for higher prices into today. And occasionally we're going to get it wrong, and we did get it wrong, and we did tell everyone that if we were wrong about that, even though it looked really good at the time, just in case, just for giggles, if we were going to be wrong, the market was going to have a very sharp decline if it broke below 1946. And so any of our long positions were stopped out at 1946, a very small number of people reversed, but the majority of us are looking, and actually now we're breaking to new lows here. But the forecast, and I don't mind giving it out now, was that the market would want to press lower to 1905 to 1903. And we've made a low today of 1918 so far. And we've told people today again to be very cautious, on the long side, because there's nothing on the long side for today. Today's going to be a trend day down into tomorrow. And because of the nature of the, quote-unquote surprise of this move. Now, when I speak about surprise, I'm really talking about us. But I have a feeling that it probably was a surprise to many. And because of the nature of that surprise, it means that the market will tend to move even quicker towards these important levels on the downside. So we believe that the market, and again, we expressed this yesterday very clearly, both in writing and in our meetings, that just in case we're wrong, you don't want to be wrong and stay long. I've said this before, when we're wrong for lots and lots of money. That doesn't mean we lose lots, but that you would lose lots if you were holding onto a long position from, say, 1952 or something. You would be in a horrible spot. So we always use protective stops, and we did, and we had a very reasonable loss considering what is happening in the markets now. So we do expect lower prices. We think that before this move is over, under quote-unquote normal conditions, the market should continue lower, testing or attempting the 1905 to 1903 level or lower. And so we're seeing further degradation of the price. We're down $44 today, and all that was needed to get this underway was a break of 1946. And in our meeting we said, listen, if they break 1946, they're going to go down to 1905. So best be ready for that. And that's what we're seeing here. So that's our take. That's our outlook on the market. Any advances we think until 1905 to 1903 get reached would be normally selling territory. So keep that in mind. And I hope that's pretty much covers everything that we have going on the S&P right now, because that's the main indication.
Jim comments, today platinum is $190 under the price of gold, the widest spread in history. That is stunning, Jim. It really is. Today platinum is $190 under the price of gold.
I mean, I don't know this for a fact, but I'm asking Jim, I guess, is platinum normally, I guess you say since it's the widest, but even though it's the widest now, is it still quite a bit under the price of gold often, or quite a bit over the price of gold? Because platinum is its own metal. It's not used as a store of value and all that as gold is.
Hey, Bert, if you're there in the background, what's the symbol for platinum? If you know, sir. I'm sure you do. It's not going to be GP, is it? I got palladium. I got close. Richard says PLV. So let's try GPLV. There we go. So the current price of platinum. Wow, big down day. $936 is where we're trading at right now in October platinum.
Well, that's an interesting insight, and I appreciate him mentioning that.
Yeah, and also, this is a daily chart, Jim, so you've probably already scoped this out. But, I mean, we've taken out an important support level here, going all the way back into July, and then we tagged it again in August. Eager buyers prevented us from testing it here in September, and now we've taken that out. And so, tell you what we'll do is, as soon as I know David has to go in a few minutes, we'll take a look. We'll project prices on the downside and see where this thing might be headed. What sort of volume does platinum trade? Okay, an average day, maybe 8,000-9,000 contracts, 7,000, 8,000, 9,000. Okay. All right. Today's a pretty good sized day. Let's see. Jim says mostly many hundreds over gold. In 2007, platinum was $1,350, $1,350 over the price of gold.
Okay.
Now,
wow.
Jim, I know that platinum is used in catalytic converters. Are there any other industrial uses for platinum other than that? I'm sure there probably is. Oh no, Casey, don't worry. You're welcome to share your thoughts. Well, I don't think you've ever heard anyone on the show agree with the government. So we're in the same school of thought. Ed says that platinum is used to refine gasoline. Okay, thank you. Burwell says the value of platinum will occasionally go below the price of gold. However, it rarely stays there for long. Ah, okay. Well, that sounds like a potential opportunity for someone who's bold and has the courage of their convictions. You're going to be with us this week, Burwell, on Thursday, so remind me, and we'll talk about that. Okay. I'm almost positive this is your Thursday. And Ed, thanks for weighing in. Jim says jewelry. Asians love platinum jewelry. Okay. Thank you for the stereotyping there, Jim. No, I'm just kidding. Let's see. Please ask David the bean question. Okay. David, I'm asking you the bean question. I forget what the bean question was.
Let me bring up the beans real quick. I may not have an answer for them today on the beans, but I'm going to click over there real quick and see anything that I do have. We've been relatively quiet in the beans recently. The ranges have been relatively small. I am looking at the November contract, and they are moving lower. One of the things that happened recently is that beans tested 1892 to 1893, and they just were not able to do anything with it. They closed below both those levels back on September 15th. That was a weaker position. We might normally have sold that, but there wasn't really enough for us to put that together. I mean, it obviously worked out to be a very nice move on the downside. But that really, obviously, if that was something that we felt strongly about, and that was on a daily reflected wave top, those of you with reflected wave should see on your charts the top that was due on September 15th, the on-time day, and that was pretty much the high. I think they double topped at the same price of $894.4 or $89.44. $8.94.4. So they did on both days, the 15th and the 16th, and now they're selling off from it. I would be interested, just personally, from my trading perspective, I would be interested in perhaps buying the soybeans if we get a daily reflected wave bottom. That would be a more interesting trade for us. So that's something that we can talk about as we get a little closer to that happening, which could happen very soon. It could very easily happen within a day or so. This week, we had noted that both Tuesday and Wednesday of this week were very important dates for us in terms of markets having big moves, big things happening, and we certainly are seeing that. We're not seeing huge moves in soybeans, but there's quite a bit happening, with the bond market, with the gold, a number of markets, the S&P, the dollar, the euro. A lot of markets responded to this week's critical dates. Each week will have certain days that are going to be very important on that week, and those dates can be known well in advance, but the more important thing is to really look at the set of conditions that surround those dates, both in the market, well, primarily in the market itself, not necessarily the fundamentals, but that's okay if you can work with that. But that's what we do. With the technicals, and we look into those dates and we say, hey, something big is going to happen. We knew something good was going to happen, or good meaning big in the S&P, and today they've really run them down substantially here, and it will be very interesting to see how they culminate and finish this move, because they don't. If for whatever reason the market is unable to get to 1905 or lower, 1903, that will mean something. Everything means something. So it may not mean a lot, but it means something, and some things do mean a lot. And so as technicians, we want to look and be able to say, this means a lot. Maybe this doesn't mean as much as something else, but taken in the whole, into its own context, you can come up with a lot of very clear indications. That's the fun part about the market, is working, coming up with an idea of what is most likely going to happen. Our work doesn't, when people talk about forecasting the future and so on, our work is our best interpretation of what very precisely the future would be. And it is amazing how precise you can get in working with technicals with the market about what the future holds. So I don't know if you can do that with people, places, and events, but I do know that there are people who are, as good or better in the fundamental world, where they can really put. I think George Soros is probably a great technician, but I think he's also gifted on the fundamental level of analysis. You know how some people just have a gift or a special affinity for something. I think he is one of the guys. You may or may not like him, but as a market person, he's a big deal. And thank you. George Soros. Yeah. But I think one of his real gifts, aside from his technical, is that he's gifted with the ability to read a very specific thing into fundamentals, and he's looking for certain fundamentals to happen very much in the same way that you could take a look at a Warren Buffett who's looking at the fundamentals of a company. Warren Buffett's certainly not a technician that we know about. He looks at companies and he discovers what it is he's looking for. And I remember seeing a thing with him on TV once where he was on an airplane flying away from a company that he had just invested in, and you could see he was just glowing. He was just so happy because he knew he got it right. He did all his work, and he figured that he saw things the way he needed to see them fundamentally. So, it's a lucky day when you have somebody who perhaps, again, putting aside Soros's political stuff, he's probably very, very astute technically, and he's very astute fundamentally, just as a skill set. And you don't see that every day. I'm certainly only a technician, and I don't really have a connection or an affinity for the fundamentals of the market. But when you have both of those, you can really, that's an extra layer of the good stuff that he's developed over his period of time. And I think there's a lot of people that have that. I think there's a lot of people that have really good fundamental senses that don't even trade the markets. And when they run into the markets and they tie those two together, they can do very, very well. So wouldn't it be surprising if you had a knack or an ability that you never knew about, just sitting around all your whole life? And the reason you don't know about it is you haven't gone out and explored or tried something to see if you have an affinity for it or whatever. That's something that I'm telling my daughter these days, is to go out and try other things, or go to a school counselor and listen to all the different things that are out there and see if something clicks in your head. Because you may not be able to figure out what it is you want to do with your life. Many people do, but many people don't. But just a little push, just by sitting with a counselor or somebody who knows all these different, a job counselor, somebody who knows all these different things that are going on, you might be surprised that something clicks. I think every single human being has an affinity for something. They've got some magic in them. Every of them, even the bad ones. They just decide to go to the dark side. But they have something that they could do, they could develop into with real superiority and really self-fulfilling. And so if any of you have children that you're concerned about, I would suggest that if they don't know what they want to do and so on. Now, Dwayne, I do have to run here, and we'll start immediately tomorrow with the markets. I promise. I got thrown off today with the comment about the Pope, and I just heard him talk about he doesn't like capitalism and so on. And I'm here to tell you, capitalism is what we want. Capitalism is what made America great. People understand it. It has its limitations, but nothing is as limiting as socialism. Nothing is as stifling to the human spirit as socialism. And so whatever problems capitalism has, they're solvable. They're workable. We can, under the right set of conditions, we can do that. But socialism has no chance. It's a worthless way to spend a life. All right. I'll see you here tomorrow, Dwayne. Thanks for having me on. And
all right,
we'll be back, and we'll do it again.
Okay, buddy.
I'll see you here tomorrow.
Have
Thank you very much.
afternoon.
Bye-bye.
All right, bye-bye. Okay, let's switch gears, and let me go find my buddy Jonathan here. Open up his mic. There he is, and he's got his own mic open. Hey, buddy. Welcome to the show.
Hey, good morning.
Hey, good morning.
Thank you. How are you?
Good. We missed you last week.
I know. I do apologize. We had a whole bunch of seasonal things come into the store. We don't being what we are, we don't buy very many things, but we do buy some seasonal things so that we have them in for people who are looking for them. You know, the fall, the holidays, and just we get those in. So I had a big shipment in last thing that came a day early, so I had to be there to receive an inventory and do all those things. So I do apologize.
No problemo.
And I know there was a huge clamor. I could just feel it.
Yeah, we squeaked by.
I'm sure you did.
I took the day off early.
Good for you.
So what's been going on with you, otherwise, life-wise, market-wise?
No, it's been good. I mean, with you know the multiple things going on, you know, the business is trying to open the new ones, and then trading in the morning and doing that with the friends. Life is full, enjoyable.
Haven't talked
did
to
enjoy.
You. Oh, I'm sorry. Go ahead.
Go ahead. No, I said I did enjoy the debate last week. We haven't talked since that last.
That's where I was
one,
headed. I was going to say, give me
day.
your take on the debate and on the decision that the Fed made, which was the decision the markets claimed they wanted until they got it, and then it freaked them out. So,
right.
Well, what do you take? Let's go. You can start with the debate, or with the Fed, either one.
Yeah. So with the debate, I think that it was entirely a different type of debate. Meaning, it certainly seemed as if they were definitely trying to pit people against each other. So, for example, they would say, Jonathan, Dwayne thinks there's global warming. What say you? And tell Dwayne directly what you think. So they definitely set it up to be an adversarial type of discussion, which it did kind of warp into a couple times, which is great reality TV, but not necessarily very good for learning anything other than perhaps maybe character or somebody's capacity to think quickly on their feet, and or to have, as Paul Rand would say, a sophomoric comeback. I thought it was very, very interesting, and I knew, or at least the pundits were saying that people were going to be more aggressive with Donald Trump, but in his regular fashion, he didn't wait for anybody to get to him. He within the first 30 seconds threw a zinger at Paul Rand, saying he didn't even belong on the stage. He had less than 1% or something like that. And
that was sort of mean-spirited, but apparently he doesn't have an issue with that.
No, but that's Trump's style. Meaning, if he feels he's going to be attacked or done, as he would in the business world, he would preemptively strike. So I think that from a understanding, at least that would give us a window into character, you know, and the way that a man thinks and what his proclivities might be, good, bad, or indifferent, whatever you felt. Overall, you know, I thought that Carly Fiorina definitely represented herself well. She was articulate. She had things that she had pre-thought out, and she showed that she was relatively quick on her feet. So I thought she represented herself quite well, whether you like her or not. I think she definitely showed that she wasn't out of place, and as she probably did in boardrooms across when she was in there, she probably acquitted herself quite well. I thought for the first time, and this may have just been my opinion, but I think for the first time, Donald or Mr. Trump looked a little out of place, meaning he seemed a little small for the stage and the dialogue. But that might be my opinion, because I don't have the highest opinion of him, so it may be tainted there.
Well, I think he's starting to understand that it's going to take more than money and bullying people to actually take the Oval Office. He's going to have to. He may never change who he is on the inside, but if he wants to win the election, he's going to have to moderate who he is on the outside. You know, I mean, he can be a little Hitler on the inside if he wants to, but on the outside, he's going to have to start behaving like a president, or the American people won't. I mean, the president we have now, certainly, in my opinion, he has not behaved presidentially since he gained office. But
Sure.
Prior to being elected President of the United States, he appeared to have the greatest respect and held in the highest regard the presidency of the United States of America. Now I feel that he spits on the title, and rubs it in with his boot heel. But
Sure.
So if Trump's in it to win it, his team is going to have to, somehow figure out a way to sand off some of those rough edges, and he's going to have to start acting like. And I think that this debate, I can only imagine how many times he has played that thing over, not only in his own mind, but I mean, sitting in front of a screen watching it over and over and starting, and he's either doing one or two things. He's becoming more and more intoxicated with his own voice, or he's starting to see what changes he's going to have to make. Now, he's still, I mean, it's not like he suddenly cleaned up his act the following day. But I mean, we're so early in the game. I mean, at this point in the last election, I think it was Rick Perry was in second place.
Sure.
Or it was some incredible statistic that I heard yesterday that my unphotographic memory. It's just sort of a blurred photo. It's like one of those Sasquatch photos. It's just this blurred image. I can't clearly remember what the numbers were. So.
Well, I think soon a lot of the candidates are going to become relatively irrelevant, and it will start to narrow itself down as we get closer into November and to December, and then the American people will have an opportunity to make a choice, and that is what's so incredible about our system and the way that it's been set up. And we literally, outside of two assassinations, which were not necessarily coup d'etat type of things, at least that I'm aware of. We are the only nation that from its inception, after it was incepted, has never had a bloodbath to change political power or political sides. And it's what's absolutely amazing. So we as a country will have an opportunity to make our selection, and then just like the nation of Israel, we'll live with whatever Saul we choose.
Yeah. Casey, your question is perplexing at best. Does it really matter who's in office? Come on, man. Well, as I typed into you, it matters to me. I guess I can't really speak for anyone else.
All you have to do is look. Well,
it matters
Dwayne,
to me.
All you have to do is look at the last 7 years or 6.5 years, and that answers the question. I mean, what he said in front of the columns in Chicago when he said that he was fundamentally going to change America. We have fundamentally changed since he took office. So I think the answer to that would be yes. But that's just my opinion. So, anyways, to the Fed, I'm somewhat of a conspiracy theorist when these things come up. So, I have felt as if back from the turn in what was it, 2009, when we hit 666. Is that when we hit 666?
I don't know. Was it 2008 or 2009? Anyway, but yeah, I remember.
And the Fed basically started handing out money at zero interest rate across the table to make sure the banks were sound and could survive. And their biggest issue was derivative mortgages, which were linked to real estate property, which ultimately would hold some value, if not the real value that it was. That was just it was crazy. It was things because they allowed them to write stuff on their books, and I go into it for hours perhaps. But the basis of my diatribe there is that money that was passed across the overnight window was used basically for one thing only, and that was to prop up the stock market. So the larger institutions that were able to be combined started buying the stock market, and that's why we saw it go from 666 up to break the high. And that gravy train, the banks just do not want to be over. Just don't want it to be over at all. Because they've basically been able to take money for free and do it whatever they want. And what they certainly haven't done is loaned it or put it into the general population. Anybody that's gone for a business loan or
That's
a
right.
mortgage or any of those things can testify and raise their hands and say that is the truth, because it has never been harder to borrow money, ever, at least in my lifetime.
You're absolutely right.
And I'm in my mid-50s, so it's never been more difficult to borrow. And if we literally are putting about $1 billion a day cash liquidity into the market, it's not getting out to people like you and me. And so it's got to be going somewhere. And it didn't go to cover the debts that they had because they allowed them to write them off, even when they were still holding the personal property. It was just disgusting. So back to the original
and
question.
as a nation, we've only created more debt.
Oh, of course, absolutely.
Astronomically.
To answer the
Yeah,
go
go
ahead.
ahead. No, go.
No, I was just saying, to answer the question about the Fed and dropping the interest rate. I mean, I as a conspiracy theorist, I think that the market tanked beforehand to give the Fed an idea of what they were looking at. So the Fed blinked and didn't drop the interest rate, but the market movers are looking at it as a perfect opportunity right now. Absolutely perfect opportunity.
Ed W., going back to the presidential comment, says anybody that says it doesn't matter who is in office is not considering the power the president has with his executive orders. This president has implemented much of his agenda through the executive order process. That's very true.
A phone and a pen, right?
Yep.
A phone and a pen.
Yeah. The question is, what can the rest of the world do to mitigate the amount of damage that can still be done between now and, I mean, even after the election? I mean, he's still got the keys to the office until the following February. You know what I mean? I mean, it doesn't take a whole lot of signatures, and it doesn't take too many signatures and too many phone calls to do a whole lot of damage. And I believe that he's keenly aware that the amount of time available to him to complete whatever this Manchurian candidate's agenda was coming into office, whoever the puppeteers are. I mean, I've said this since the night of the first election when the results came in. I've said it since that day, and I continue to say there was no one on planet Earth more surprised that Barack Obama was elected president than Barack Obama. He was absolutely flabbergasted that the American people, that he went from nowhere to the Oval Office in the blink of an eye. It happened, and he still, I think, and this is my conspiracy theory, I still don't think he knows fully who's behind it. I don't think he fully comprehends who manipulated things, who pulled the strings, who got him into office, who he is, quote unquote, in debt to. And I think that's one of the things that keeps him doing the squirrely things that he does, is because he's not still fully sure which master he serves, and so he's trying to serve them all. But we all know from a biblical perspective that no man can serve two masters, and so he has to face life after the Oval Office. Okay, and what will that entail for him? Now, for Bill Clinton, obviously, he turned it into a gold mine. Will Barack Obama be able to do the same thing? Well, certainly he will try. His speaking engagements will draw a hefty premium, I'm quite sure. But once his purpose, again, I call him the Manchurian candidate, once his purpose has been served, once he leaves once his pen and his phone call no longer have any power, I hate to say this, but I believe those that put him there may find that they no longer have any use for him, and I hope his days are long upon the earth, and that he finds out who the true God and creator of this universe is. I hope he does. But
Amen.
I'm thinking he's going to be used up and thrown away, and it's going to come a bit unexpected. And I pray that I'm wrong. Anytime I have these bad, eerie, weird, creepy thoughts about something, I just, oh God, I sure hope I'm wrong, you know. But I keep going back to that place. I keep going back to that place with him, and so, and at this point, he's so far in over his head. Like I said, I don't think he even knows who his taskmaster really is. So, anyway,
Wouldn't it be funny if it turns out to be Joe Biden? I just only.
That's funny.
I just only.
Okay, it was March of '09 that we saw the 666. Thanks, Ed.
Mhm.
Thanks, Richard. Ed Query, Ted Cruz was the only candidate to say he would do everything he could to rescind all executive orders written by this president. He said this in the first debate, and he is a man of his word. Yeah, that guy, what are your thoughts on Ted Cruz?
Hello?
Yeah, we're still here. Jonathan?
I'm sorry, I hit something while I was sitting here at the desk.
Oh, can you hear me now?
Yes, I can.
All right, so Ed said Ted Cruz is the only candidate to say that he would do everything he could to rescind all executive orders written by this president. He said this in the first debate, and he is a man of his word. And so my question to you was, what's your take on Ted Cruz?
I think he's a man of conviction. I think he's intelligent. He definitely is a great orator. I think he is definitely somebody I would want on my side, meaning in any kind of situation. I'm just not sure he would be my selection for president. But that would just be a personal take. But I would have nothing but positives to say about what I have seen of him as a human being, meaning I don't know him, of course, at all. But based on what he's done, if fruit is the way that you judge people, if forced to judge them from afar, I would have to say his fruit lines up with his word, and that's a good thing. It means his yeses are yeses, his noes are noes, and that's an honorable man.
Yeah. Casey says, my question, who makes war, the people or our leaders? And do the people of these countries really know why they are in war? Well, Casey, yeah, I think there's a couple of ways to answer that question. I suppose when Pearl Harbor was bombed that Sunday morning, we could have sat around and said, dang, that was nasty, and just gone on about our business. No, I think we were called to arms, and so when bombs start falling around you, I don't think it's a matter. You know, when your towers tumble, somebody's got to pay. Okay, maybe you shoot the wrong guy. I don't know. But since 9/11 and since the Patriot Act, look at how many things we have. How many terrorist attacks have been thwarted? True, genuine attempts to take American lives on American soil have been stopped dead in their tracks. And that's because we've taken a proactive stance. And I mean, we could sit back and do nothing and find ourselves in internment camps. You know, I mean, that could be the future of this nation if we choose to do nothing. Okay? Which is kind of what our president has chosen to do in regards to Syria. And we talked about that yesterday. One of the ugliest legacies of this president will be the fact that he chose to allow this atrocity to happen in the Middle East. And again, maybe he's just doing what he's told to do.
Don't know.
Which is nothing. He's the one who said he would uphold the Constitution, which is what needs to be enforced again. Thank you, Richard, and I believe you're referring to Ted Cruz on that, correct?
I believe he is.
Yeah. Yeah, I mean, it does come back to that. It's pretty basic stuff. Let's talk about the markets for a couple minutes.
Yeah, definitely.
What's your take on the S&P? Let me go to a big picture look
Sure.
at the S&P here of what's happened since. Let me scrunch this. Pull this down. All right, so here's Fed Day. And we've put in a leg and a retracement and a leg, basically. I mean,
Yeah.
now, we were not at that high-level meeting yesterday where 46 was discussed, but on this radio program, we pointed out the obvious, which was right here, that, if price, leg, retrace, if, on this right here, I mean, if we took that out, we caught a bounce. The other side of it was, remember, our coins always have two sides. If we take that out, well, then that opens the door for much higher prices. And if we take that out, we get this. Okay, right down to the support area that we had projected both last week and within a point this week as well. And now it's held up for 1, 2, 3, 4. We're in our 5th hour. So, what are your thoughts? How did this come to happen? Because everybody was screaming, "Don't raise the rate." Oh, and Kramer was taken to task yesterday. I was going to try to bring up that article if I can find it. They were telling him that he needs to shut up screaming about 0% in interest. While you answer the question, I'll see if I can find that article.
Well, as you know, I call myself more a market behavioralist, even though I am a technician, certainly not a fundamentalist, but a market behavioralist. So we firmly believe that after the big drop back in August, that the market would look to get all the way back to about the 210 area. So it was able to do that, and once it got back to the 210 area, irregardless of what's happening around it, that the people who move the markets would take advantage of that and push that again down to the downside with a couple intermediate targets. And today's target would have been 1925-ish. So we got down there. So I think it's behaving exactly the way it's supposed to be behaving based on the people who move it and the behavioral ideas that we look at. We had two numbers and as I said, our numbers and your numbers almost always wind up being somewhat close to the same. We had a POC area of 1957, so anything short of 1957 was going to continue to go down and test, and then if it passed 1945, we were going to try to get down to the 1925 area. Again, like I was talking about a couple days ago, this all comes to the story that you're creating, and it's really important in your trading and in what you do. And one of the things that I like most about what you guys do there is that you have a story, you stick to the story. The story it's not about whether it's exactly right or exactly wrong, but the story, as its story unfolds, then you execute based on it. And I think that's just so important. I think it's so much more important for a trader, and I don't know how many new traders we have, or traders who are struggling or just looking to get that start and do something positive. It's so important to become a great trader before you worry about making money. You just absolutely have to become a great trader. It's just like learning a skill set. It's like doing anything else where you go to a job or you get something and you learn how to do it, whether you're a roofer, a painter, an audio tech, a salesperson, that you learn the skill, and any money that you make in a process of learning that skill is just a bonus. The idea is that you perfect your skill in the processes that you're going to use, and then you apply that thing which you learned that gives you the advantage, like Mark Douglas talks about. I think it's so important. It's what I really like about what you all do is that you teach folks a skill, teach them a story, how to stick to that story, and then you give them the guidelines of how to execute. And then it's up to them to become great traders, though. It's up to them to be disciplined and work accordingly, and not psychologically self-abuse. But well, that's my bloody pulpit there.
You know, on our Finest Day, our goal is to help people understand what the story is. In other words, every candle, everything that happens on this chart, it's telling a story.
Mm-hmm.
And it's like you know, unraveling a mystery, you know, putting the pieces of puzzle together.
Mm-hmm.
David and I have talked about showing up at the, you know, a detective shows up at the scene of a crime, and he immediately whips out his little, you know, notepad and starts to jot down clues to figure out, you know, what's going on, and, you know, was he killed, you know, with the pipe wrench in the library, or what was that game?
Right.
Clue? Yeah.
Clue. Yeah, it's Mr. Colonel Mustard in the library with a candlestick.
Mustard, that's right. God, I haven't heard that in forever.
Exactly. That's such a fun game.
So, from here at this 2122, your version of the story, whatever the story is, as you unravel this mystery, I can tell you our version is that price moves back up to this 36.37 area, which was, let me get my story straight, a weekly trading zone from last week.
Sure.
All right. It either moves back there, or it drops lower to, I think I highlighted it on the other. Yeah, maybe I highlighted it over here. I guess I need to make that go away. Okay, we either go back to the 36.37, or we drop to this area, or to this area. Okay.
Let me hold on. Let me pull up where I can see what you're saying. Okay. Yep. All right.
So basically, I'm talking about the first area on the downside would be 1890/91.
Okay.
And then the next area would be 1876/1877.
I would have no problems with those numbers. I mean, I think that you have a daily low somewhere around the 1900 area.
Now we both got taught that whole round number thing.
No, it's not a round number. It's just a daily low.
I just want to ask a question. We were both, you know, a lifetime ago it seems. We were taught about the importance of the round number. And you know what? I haven't seen that play out so much.
I give no credibility or credence to anything that I was taught.
I mean,
in that circumstance,
we flew right through the 2000. Now, granted, there was plenty of fuel on the fire, to use another term. It flew right up through 2000 and put in a high at 2011. But I guess backing away, and in hindsight, a person could look at that and go, well, okay, let me come over here and remove that.
I pay attention, since I'm a really short term and a clipper, to previous days, highs and lows when they sit out in space. And not so much that I'm trading off of them or using them as a target, but I want to be aware of where they're at. Because the people who trade the big DD contracts or the double contracts and the others, they're trading these bigger time frames. And so when you get into their ballpark or their spectrum, you just kind of want to be aware of it. Yeah. But for today, for example, we had a what we'd call a profile or a range area starting in, and I'm using Arizona time, starting about 2:30 in the morning, and it went all the way to about 7:30, and we played in that area as we had an outside day again. I kind of tried to explain that a couple weeks ago. Mm-hmm. But then when it broke that profile area, then we knew that what we call a decision point, and that's a place where those people who missed, or those people who who are looking to gain an opportunity to go in the direction the market would be looking to re-enter the market in that 28.75 to 29.50 area. And so that was the secondary entry for the longer move down to 19.25. Now, I don't trade these swings, but what I like to do is I like to know where the story is and what the railroad track looks like, so then I can go in, and when I get the setup or the type of trade that I want to take in the shorter term, I can go in and slice that nice piece of pie out and put a little ice cream and have an a la mode and glass of milk and just have a tasty dessert, so to speak.
Now, what hour, you mentioned an hour. What hour did you mention?
When the range period started? Yeah, I would say for us it would have been about 2 o'clock-ish.
2 a.m. this morning?
Yeah, 1:45, 2 a.m., and that would be Arizona time.
That's Arizona time. Okay, because for us, 3 a.m. Eastern, London open, that's when our Concierge Trade Alert shorts was triggered last night at 1955, which led us down to this area of support here at 21.22. And so if you're talking 1:30 Arizona time, so that would be 4:30. So that would be in this hour here. Yeah, okay.
So I'm talking about the price area between about 37 and 28. We set up a value range area in that place, and so as from a bigger picture, from a bigger story standpoint, when that balance area of trading on both sides, up and down, so the bigger guys are trading and they're doing what retail traders say they're going to do but never do, and that is sell high and buy low. They did that between those numbers. Once the market moved outside of that valued area where people were willing to trade on both sides of it, then it created a secondary opportunity, and that's for those folks who weren't on board or who had gotten out at the previous low and wanted to re-enter the market from that standpoint. And again, we said that area was going to be between about 28.75 and 29.50. So once we got up there, it was an easy slice to take out of there on a couple different opportunities going down. And again, our goal at the bottom side, very much like you guys were, around 19.25 in that area. So yeah, I think.
Are you trading anything these days other than the S&P? Are you trading any gold?
No, I trade the ESs pretty much. Like I said, for me. The other markets, and I know we've had this discussion, but from a standpoint of slippage and other things, for me, the other markets are a little thin for me as a clipper. So I like them. I like to watch them, and every once in a while, since I have alerts on other markets for the same thing I do with this, it will set up, and I'll flip over there and I'll take a trade if I'm in the situation that offers that in a good value to risk. But mostly just the ESs. There are plenty of opportunities, at least from what I see in the day, and because I just trade a couple hours in the morning, usually till about 9:30.
Something you said on the show a couple of years ago really stood people on their head, because it's the same thing that I say, but they're so used to hearing me say it that they just don't pay it any attention anymore. But when somebody else came along and said the same thing, then everybody's like, "Oh, wait, no." Okay. And that was, we have our 24/20 blueprint, and we've really written it out, line upon line. It's all clearly defined. You have 10 trades a day to make your $100 a day. Not an original thing. I've constructed it in a way that it's very easy to follow. And two groups of people who, when the concept of the 24/20 blueprint is explained to them, people fall into one of two camps. Oh my goodness, you got to be kidding me. I get 10 shots at making $100 a day? Awesome. That's one camp. The other camp is, well, what if I don't?
Mm-hmm.
What if I can't?
Mm-hmm.
Well, okay. Well, but that's why we have these rollover trades and the whole concept, the bigger pictures. It's designed psychologically to take the pressure off of you so that you don't feel so pressured when you sit down, and you don't shut down when you get stopped out 2 or 3 times in a row, because you understand that the market is an endless flow of opportunity.
Mm-hmm.
And so, I you know what, I didn't mention this, but I assume you know about Mark
Yes.
Douglas?
Yeah, absolutely. Oh yeah, definitely.
Okay, yeah, he and I, well, I'm talking about his passing.
Mark Douglas died?
Yes. I'm sorry, I should have. Yeah, he and I had gotten pretty close there. Towards.
Yeah, wasn't he just on your show just a couple weeks ago?
Yeah. And then he's had some health issues for a period of time, but it had gotten progressively worse, and he was in the hospital. But he had gotten out of the hospital, and he was pursuing a method of treatment. And while he had been gravely ill, make no mistake, it was, I spoke with him on a Thursday night, as I recall, and we're coming up on 2 weeks now. And,
oh my!
It certainly was not expected by him, his wife, the doctors, or anyone that he was going to pass when he did.
Did you help him to the Lord before he passed?
No, I'm sorry to say that. Now, although he and I prayed together, and my
Amen.
My understanding is that he was no stranger to God.
I'm glad.
His wife is an ordained minister, not a traditional minister in the traditional Sunday morning preacher kind of a thing, but in the state of Arizona, she can legally perform a marriage, and so, in fact, when he opened up to me the first time, the seriousness of his health condition, because he was very stressed about completing his final book.
Right.
The third book, and it took 3 months, basically, I think, to complete the last 3 paragraphs. But when we spoke on that Thursday night, part of it was to tell me, "Hey, I finished. I'm done." And I said,
I saw you tweet that.
That
I
is
saw
so
that you tweeted
awesome.
that. Yeah.
I said, this will take this pressure off of you. But see, he wasn't working for a publisher. His intent was to self-publish this book because he did not like the way publishers had handled his material in the past, and so he wanted to have more hands-on control. And so I kept saying, why don't you relax? Why don't you back off? Why don't you take a little vacation, a trip? Go sit up on a mountaintop somewhere and just have some peace, and then finish the book, because the stress is affecting your health. And he said, well, I can't. I got to get it done. There was something in him that told him that he knew that, I'm not saying that he knew he was, eminently going to pass, but something in him was urging him to not let up until every last word was written. And again, he had said to me that this will be my final book on trading, and the 3 years that I knew him personally, it remained the same answer was, when I'm done, there won't be any more questions. Which I thought
I heard him say that
stuff.
in the interview. Yeah, I heard that in the interview.
So anyway, I brought him up to, we were talking about the fact that when I lay out the blueprint, the endless flow of opportunity, I didn't get to the random distribution of wins and losses, but your comment on the show a couple years ago was that when people ask you, well, at what point do you stop? And your answer was, when I reach my daily goal. And everybody kept coming back with, no, yeah, I understand you stop when you reach your daily goal, but what happens when you don't reach your daily goal? And so I'm going to throw you back into that cauldron, that boiling
Sure.
cauldron again, and see if,
Sure.
I mean, years have passed, things have happened. Maybe your perception of that and the way you handle that is different today than it was since we spoke about it.
I think the real question that's being asked when you're asked that question, having talked with and discussed this with many traders, both on a professional level and just as friends, is really how do you deal with losses, and what is it that how does that manage, or how do you manage that psychologically? And I always go back to the idea that every trade is a single event unto itself, and that the idea of accumulating it on the win side or the loss side is damaging. And so I think the dialogue or the discussion we were having was, what do you do when you've had 2 or 3 losses in a row? And my answer was, I trade again. The next trade stands alone on its own, with its own probabilities, its own capacity to be successful or not successful from the standpoint of making money or not. But if you're trading with an advantage and you're being an excellent trader in the execution of the art form of what you're doing, and you have an advantage, you will be successful. And so I think the answer was, from that standpoint, is each trade stands on its own. And there is no like continued thing. It's like flipping the coin. The last one, just because it was heads, the next coin has no greater possibility of being tails than it does heads. It stands on its own. So realistically, I trade. I mean, I have a time restriction because I have other things I do in my life, but I trade until I reach my daily goal. And what happened in the last trade has no bearing on whether or not I take the next trade outside of my plan and my process. Does that answer that? Not really?
Why don't you encapsulate it one more time? I know you got to go. I know we're out of time.
No problem.
How much time do you allow yourself for trading each day?
Somewhere between 2 hours and 3 hours each morning. Maximum of 3 hours. A minimum would be if I reach to where I want to be.
Okay. You're an hour in to your 2 to 3 hour time allotment. You've made twice as many trades as you make on a typical day. You've not reached your goal. What's your next course of action?
The next course of action will be predicated on what the market does and the story that it unfolds. If you're asking me, do I take another trade, the answer would be yes. But I would say that I am a proponent of what you teach. The practical answer to that is, I probably have 985, and I'm pulling a number out of a wag, but I probably have 985 stored up trades from the last umpteen years. So,
and I've also factored in rollover percentages too.
Sure.
I know we didn't used to talk about that, but that's something that is very much, because if my goal is 10 ticks today because I'm trading the Russell, if I get stopped out with 3 ticks and I get stopped out with 4 ticks, and then I get my 10 tick goal, well, that's 17 ticks. That's 170% of my daily goal. So not only am I rolling forward 7 unused trades, but I'm also rolling forward 70% of one day's production. So I concur. So I think for somebody that's in my situation or position where I've been trading for so long and doing it, the answer might be a little bit different than somebody who is still working on the skill set of becoming an exceptional trader. And I'm not inferring that I'm an exceptional trader. Yes,
what I'm inferring is I'm a disciplined trader. Meaning if you knew what I did, you could tell me what I was going to do the next day before I did it. Meaning it's disciplined enough that you could, you may not know exactly the execution, especially on the exit side, but as far as executing a trade and what I do with my stop and where the stop is and what type of trade I'm looking for and what is the story going to unfold, that's going to be consistent enough that you'd be able to, after looking over my shoulder for 3 or 4 days, pretty much know exactly what's coming next. So I think the idea though is that you create a process that works for you and works within the context of who you are as a human being, and creates the environment where you will not, cannot, absolutely won't lie to yourself about what's going on, and then you participate. And you participate, like Mark Douglas says, you participate with, let's see, what's the word with prejudice, meaning you execute with prejudice.
Well said.
All right, my friend, I got to run.
Next Wednesday.
It's always a blessing, and I appreciate it so much.
All right, my friend. Take care.
Be well. Bye-bye.
Thank you so much. All right. And everybody in the audience is going, who is that guy? Who is that guy? There you go. Stir him up, baby. All right.
Talk to you later.
I'll talk to you next
Bye.
week. Bye. That's Jonathan, my friend. I told you. If you follow the link that I just showed you there, CFRN.net/CFRN-team. From the home page, it's pretty easy to find, quite frankly. It would be something kind of like this. CFRN.net. And then you just click on the navigation tab, team. And there's Jonathan. He is our resident market profile specialist. I never knew how much distaste Elder held for market profile. I thought everybody just kind of accepted it and thought it was okay. You know, some people are not a fan, but I was surprised to read in a book the other night that he was like not a fan. If you want to know how to get to our Google Plus page, that's a piece of cake. You go to the Emini Radio blog. You click Watch Recent Broadcasts. And up pops yesterday's show with Garrett. Click it. Give us some time to load big files.
All right. That's all I got, Dwayne. Wait.
That one. Oh, and actually when you click it, it tells you that we're actually live now, because we are live now. I didn't realize that. The internet. My goodness, how clever. I hope they keep it around. I thoroughly enjoyed it. How about you? Okay, what market did we not look at? I think we didn't look at the Russell. So, let's look at the Russell. Let's get rid of these lines because I don't know if they have any bearing on anything that we're doing here today. Alright, now the alert came out at 2200 hours last night, which would be right there. Yeah, and it is good to know that you're listening to me alive. It is, thank God. I just didn't know that thing popped up and let people know that the show's live now if they click on an old link. That's very clever how they did that. Okay, so the Russell last night on the Concierge Trade Alert, it said to consider being short below 1148. So that's going to be right here. Get it straight? Not quite. There we go. So 1148. Right there. That's what the alert said. Consider being short below 1148. On the first, well, this move here took us to 4670. That's enough to get your points for the day. From 48 to 47, that's 10 ticks. That's what you need for the 2420 blueprint. But in this initial move down into this second hour, see we got our points for the day in that hour, and then important prices, important areas, almost always tested So we drop a second time, and the second time we drop to 1140.40. Okay. Ultimately, the swing low on the day has been 1130.40. So 17 points from alert to the low. No, we don't expect anyone to capture all 17 points. That's a $1,700 per contract move. If you sold it here and held it all the way to here, it's roughly, give or take, $1,700. Okay? Do we teach you how to do that? No. No, we do not. We can teach you how to enter here, and how to trail a stop, and how to look left, and how to do a lot of different things. But I know of no one that can teach you to sell short here and exit at 1130.40 to the tick. If you ever run across that guy, man, I want to meet him. Okay? I'll buy lunch. Lunch is on me. Whatever you want. So at $100 per point, the S&P pays 50 per point. Okay, the Russell pays $100 per point. Now, something else worth pointing out. This happened at 3 a.m. in the morning, London Open. How often do you hear that? Okay. How many times when we're going through the Concierge Trade Alerts, I go, well, here's the deal. This is when the alert went out, and this is when it triggered the London Open. Okay. How do I know here it's going to trigger at the London Open? I don't. It's not about a time thing for me. It's a price issue. Okay. Important prices, important areas, almost always tested. I don't have the time. What is it? Space-time continuum thing. I don't have that going on. All right. Now, how tradable is that at 3 a.m.? Over time, we've seen it become more tradable. In that hour that triggered, there was actually 1,085 contracts. Okay. Now, as we get into the, see on this pull back here where we tried, remember this was a big green candle, and you just knew that it was going to come up and tag the trigger line. It got up to 1147.40. We needed it to go 6 more ticks to hit 48, right? Didn't quite get there. Didn't quite make it. Now, in that hour, which was the 9 a.m. hour, we go from having, on the London Open, 1,085 contracts. We jump up to 15,000 contracts. And in the 10 a.m. hour, we jump up to 17,000 contracts. Okay. Now, I think the only market we did not look at so far, or that I haven't looked at all today, would be the euro. Let's see what happened with the euro. 2,200 hours last night. We did come up shy, I think. Well, I think soybeans moved a tick in our favor, and if you're trading the blueprint, you'd have got stopped out at break even. I think that was the story on soybeans. Soybeans, as I recall, soybeans short below 862. 862. And the swing low today was only 861 and a quarter. Is that right? Yeah, I guess it is. Short below 62, 861 and a quarter. So that would only be, somehow I don't think it is right. Okay. So then there was no opportunity to go to break. That was a stop out. And that's unusual for beans, because beans are usually pretty reliable. But now you've sidetracked me from the euro. Alright, what happened with the euro? Consider being short below 111.10. 90. Okay, here's a tricky one. Here. We don't want to make it look easy because trading's not easy, but it can be simple. Okay. The alert, you know, with bonds today and the S&P. Oh, we didn't look at the Dow. We can do that. 111.90 was the short side. Okay. And so on this first drop, we got down to 111.70. So that's 20 ticks. Now the euro pays 12.50 per tick, so you need 8 ticks. Ultimately, we dropped down to 111.30 from 111.90, so there were 60 ticks from here to here. I can get you in here. I cannot get you out at 1.1128. Just being honest. Teach you how to take the entry, teach you how to advance your stop to lock in profits, teach you how to trail your stop, all of the things that are teachable, right? But parlor tricks, magic, I don't have any, you know. Is there a way? I mean, could we do some things? Yeah, we could do some things. I don't want you to think that it's not possible to. Let me just, for instance, show you this. Okay. So from that swing high to that swing low to the top of that retracement, that would have given you, okay, once you triggered and had your retracement, let's see, that needs to come up just a tad, I think. Let's see, what's the swing high here? Oh, come on. Really? I think it's pretty close. I can't get it to. It just won't do it. So we're going to go 11224. Okay. So once you had the trigger, once you had the retracement, could you have used this tool here? What happened to my tool? Alright, we're going to start this whole thing over again. Something went wacky. Okay, let's try it again. From the swing high to this low, right there, to that retracement, which I guess we decided is 11224. All right. So that gave us a reasonable target of 111.51. So from 111.90, so as we come back down through the second time, because we've already pierced it once and we've got a retracement, we now have a Fibonacci price target at 111.51. Did that happen? Was that doable? Could you, on this second pierce, as we come down through, could you have said, I'm getting in this thing at 111.90, just like the Concierge Trade Alerts says, and because I have this retracement to work with, I can now give myself a hard target at 111.51. Yeah, did it pass through that? It did. Could it extend further down? Absolutely. All things are possible. Now, that's the entire move down. What if we look at just the last leg down? Okay. The last leg down would be from here to here. To there. Okay. And using just the last leg down, interesting, 1, 2, 3 hours now we've been sitting atop this Fibonacci price extension at 111.38. So that's a 52 tick move at 12.50 per tick. Now, this number was knowable after this retracement was put in. Okay? When I sent the alert out last night to get short at 111.90, this number was not knowable because this low had not been put in and this retracement had not been put in. This was already known. But the other two pieces of the puzzle were not. We had to wait for those two pieces, those two puzzle pieces to be put on the board before we could then surmise that a potential target for this move would in fact be 11.57 followed by 11.38, and we've holed up there for 3 hours now, and beyond that potentially 11.15, and then if things got crazy down to 10.47. Okay, if you're on DT Pro, your price extension tool is right here. Your retracement tool is right here. Okay. Now, if this thing starts to rally back up, how high do we expect it to rally? What could we expect based upon math, the universal language? Well, if we look at the entire leg, okay, 24% retracement would be back up above our entry. But see how it lines up right here? Now remember, each one of these candles is an hourly candle. Okay? Alright, so that's the entire leg, or the entire move. Let's look at just the last leg. And that would take us from here to here. See, that puts us just shy of that 111.90 on a bounce back up. And so, with that knowledge, if price were to pop back up, you might consider an entry at 11.80 versus waiting for 11.90. Why? Well, hopefully, I mean, this thing has dropped 50 ticks. Hopefully, in just the first hour that it triggered, it dropped 20 ticks. You only need 8 to be done for the day. Okay? 8 ticks times 12.50 per tick. It's $100 per contract per day. Once you increase your account balance by $2,000, you then add a second contract. And then the blueprint walks you through the addition of contracts up until you've grown your trading business to whatever size you envision growing it to. Alright. Alright. So I'm going to leave you with that. Let me take a peek at the chat box. I think all questions have been answered. Okay. And so, with that, I'm going to bid you adieu. Thank you so very much for tuning in today. Each and every one of you. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, Call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision. You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and